Well, hey everyone, Sean Derrick here with the 1245 team at Keller Williams Realty. 2025, y'all, is done. It's in the books, and what a year in real estate it has been. Today's video, I want to share with you a real short amount of time on the January housing market because last year really did come to a halt. It just ended, and I want to share with you what I mean by that. But I also want to share with you kind of the three biggest shifts that we saw this past year, and also what I'm predicting in 2026. If you're thinking about buying or selling or investing, of course, watch this. If you just like learning, watch this. I think it'll make you educated and a better real estate entrepreneur yourself in some ways. So let's dive in to the housing market update of January. So as we see, availability is, inventory is down 18% month over month. Under contracts, down 16.5% month over month. Solds was up almost 12% month over month. What does that mean? Y'all, the real estate just ended in December, okay? Less houses going on the market like normal. All the pendings, those were going down. Nobody was really putting contracts in, and everything was closing out in December. It did come to a halt, right? It just stopped at the end of December. Month over month inventory, down 27%. We had 1.7 months of inventory right now, so inventory is low. But again, that's normal. It's seasonality. Nothing to worry about. Days on market, went up because some houses took a little bit longer to go under contracts. Average days on market was 68 days. But remember, we follow the median right now because there's a lot of overpriced houses out there. And that's 43 days on the market. And then we have listed close price, 99.4%. Average sales price is hanging on right at that $575,000 price point. So guys, the month itself ended kind of normal, but it ended. And we are in 2026 now. Let's just kind of talk a little bit about what I think were some of the biggest shifts in 2025. First big shift, and I think this is huge, is the market is kind of finally tilting back towards buyers in 2025. It's one of the biggest shifts that we saw. Listen, literally since the Great Recession, right back in 2008, sellers have had kind of the upper hand, right? They've had the power since then. It's a long time. But in 2025, we started seeing buyers finally stepping back from those rising prices and getting houses, at what they should be getting them at. And so that was one of the biggest shifts that we saw this past year. But if you really consider the numbers, it makes sense. So in 2024, the average days on the market was just 19 days, if you remember that. This past year, average days on the market was 39 days. So houses just simply staying on the market a little bit longer, right? And buyers have a little more time to shop. It means they maybe be able to get more concessions on a house that they want to be able to purchase. That's literally double the time homes sat on the market just from a year and a half ago. So days on the market a little bit longer. But I think this is really interesting. Homes still appreciated though. So even though buyers, they were getting a little bit of what they wanted, nothing crazy, but the sellers didn't have all of the upper hand. So on average, homes appreciated 2.4%. Now here's the cool thing, that it was lower than inflation. Inflation was 2.7% this past year, and homes increased about 2.4%. So that's good news, right? It's good news. It's really literally been a super long time since homes appreciated lower than inflation itself. Now, I think in 2026, homes will appreciate another 2.5%. That's what I think. So, we have some analysts that are kind of saying 1%. Some are even saying as high as 5%. I think we're just going to be right in that 2.5%. Northern Virginia is a pretty strong market, a lot of economy, a lot of educated folks. I think we're probably going to be sticking around that 2.5%, which is just kind of a modest growth, right? Nothing crazy, but nothing bad. Average is 4%, so we're going to be under that a little bit. But I think one of the reasons why homes did not appreciate as much as they have in the past was 2025 was kind of a year where sellers were having to find the price. Get this stat, 56% of sellers had to adjust their price while on the market. Isn't that crazy? 56% adjusted it. listed close price, remember we just looked at that, is still sitting around that 99.5%. So it's not like buyers were just offering lowball offers or sellers weren't needing to take those, but sellers did have to adjust their price. They kind of had to find the price, right, that the buyers were willing to pay. And I think we're going to see that, well, sellers kind of figured it out. And we're not going to have to see as many price adjustments coming into this coming year. So 2.5% appreciation is what I anticipate for 2026. Now, inventory itself in rates, inventory did increase in 2025. We are looking at more increase even in 2026. So I think we're all seeing maybe another 10% increase in inventory over this year, 2026, which will be helpful. Perspective is listings are still down 42% compared to the average between 2015 and 2022, right? So remember those years when the interest rates were like 3%? Well, literally there was 42% more inventory on the market. So we're a long way of getting kind of back to normal inventory levels, but we are going to see a little bit of an increase. Now, when you marry this inventory increase, I would say mild inventory increase with rates that are mildly, lowering, you're not going to see a dramatic change in the market from what you saw this past year. I believe rates will hit somewhere in the high fives this year. Okay. Some analysts kind of think they're going to stick around 6.25. I know some lenders that are really thinking they might actually hit low fives. Me, I think the Feds did not cut as many times as people had hoped in 2025. They did cut it a couple times. I think we're going to see 2 to 3 more cuts. The administration is very pro-cut. So I think we're going to see the high fives. So nothing dramatically crazy, but also I don't think we're going to see the sevens, outside of anything that we don't anticipate happening in the economy or worldwide. And so what that means, though, is when we get into that high 5%, more buyers that have just been on the sideline are going to come out. So if we have 10% more homes that are going to come on the market this next year, well, we're also going to have roughly 10% more buyers that are in the market because the interest rates are slowly coming down. And I think that's simply because, they kind of call them lock-ins. So people that have these low interest rates, they don't want to sell, they don't want to move, buyers, they don't want to take the higher interest rates. So they just kind of lock themselves in their houses. Reality families grow, kids get bigger and there's more kids. Jobs really do get relocated. At some point, people just need to move. Guys, it just means a healthy market, I think, in 2026, a balanced, neutral market kind of coming into this next year. But if you are in the rental market, just be aware of something. I believe that renters, you need to be prepared for more rental increases. Now, 2025, there was a pretty hefty percentage in regards to rental increase. And I think we're going to still see that slowly going on. Because if you were just to imagine you're living in a house that if it was to be sold for $600,000, if you got a mortgage, you have a mortgage like $4,500. But the rent on that house is only $3,000. So it is more affordable for you just to rent it than buy it. Well, that's going to be evening out. Not fast and not completely even, but I do anticipate rents are going to be going up and keep climbing. Not surpass mortgages necessarily, but they are going to be keep going up. So if you are a renter, remember, ownership isn't just about the monthly payment, right? Difference between what you could rent it at and then what your mortgage would be. You have other benefits, right? You have forced savings from principal buy down. You have appreciation. Yeah, maybe it's only 2.5% this year, but that's 2.5%, right? $600,000 house. Well, guess what? What is that? That's $15,000 that you just made by owning the house on appreciation. And then you also have tax benefits. So just remember, it's not necessarily only the monthly payment and rent difference. You are getting other benefits when you own a home. Now, the second major shift that I have seen, we all have seen, guys, is affordability became more of a national issue. There was more press, there was more talk about the affordability issues with real estate this past year. We all know, all Americans struggle to afford things this past year. That's just a reality, right? And housing was the number one struggle with affordability. So, this is, well, let's tell you right here, right? The very first stat that tells you this is the median age of a first time home buyer in 2025 was the age 40. That was the median age of the first time home buyer. Think about that, right? Americans are spending half of their lives chasing the American dream of homeownership. But here's the good news, right? I think there's movement. There's movement in Washington. There was the Roads Housing Act, which is a bipartisan effort with Congress, right? Kind of really working to increase supply and modernize financing, even maybe reduce some regulations in certain ways that would help. You probably heard talk about the 50-year mortgages, right? Maybe changes with regulations that change like the big investment firms like BlackRock from buying as many single family houses. Now, do we know what's going to happen? No, we don't. But I think the good news is there is movement of making change going into 2026 by both parties talking about it. So I think that's good. But the third big story in the real estate market is I think the industry shrugged off that commission rule change. Do you remember? Do you remember the commission wars back in 2024? Remember the National Association of Realtors, right? They had to pay like $418 million to settle that Missouri class action lawsuit because sellers didn't want to feel obligated to pay a buyer's agent commission. Well, guys, I'll be honest, it kind of backfired in a good way. I don't know. I mean, I think the way it is now is much better. It's much healthier for sellers to pay their listing agent and for buyers to pay their buyer's agent. They can negotiate buyer's agent commissions on the contract itself when they offer that to the seller. I think it's so much better. But the lawsuit gave buyer agents the right to charge more and not less. That's really what has happened. So the commissions actually modestly increased since 2024. Now, here's the word of wisdom that I wanted to share, particularly with affordability. Everything has gone up in price. I think you agree with that, right? I mean, energy costs, food, medical care, insurance, cars, clothes. I mean, what hasn't gone up, right? My word of encouragement to my kids, my teens, my young adults is don't wait for the government to fix it. I mean, I'm super encouraged that there's momentum, and I really believe that we should be advocating for affordability. But when you're working hard to advocate for affordability, just remember you're really advocating for the generations behind you, right? Which you should do, which we should do, which I will do, right? But if you're able-bodied and able to work, this is an era where you gotta find ways to make more money. It's just the reality. Okay. We live in a capitalistic country. There are so many side gigs, side hustles, business opportunities you can pursue just to kind of help. So I want to help too. Okay. So here's my commitment. And I was thinking about this just for this year is I want to show people different ways they can make some extra cash this year. Right. So stay tuned to this channel. I want to be able to show like what does house hacking might look like, or what does maybe investing in a rental property look like if you're not the one bringing all the cash, or maybe partnering on deals or getting finder fees. And like in the world of real estate, you can actually make side money. And that's not even talking about all the other areas as well. So here is your 2025 recap. If you find this helpful, y'all, hit that like button. Okay, subscribe so you don't miss future market updates. And of course, if you're thinking about buying or selling or investing in Northern Virginia, reach out to me in the 1245 team. Let's make 2026 your year.